Hey, what's up, guys? How's it going today? I know that it's been a tough economic environment for a lot of businesses this year. Inflation is going up, costs are going up, bottom lines are getting depleted. We get asked all the time, how can I save money on my general liability insurance policy? In today's video, I'm going to give you 5 tips with 1 bonus about how you can save going into your next general liability renewal term. Hey guys, my name's Mike. If you enjoy my videos, remember, like this video, comment below. I like to reply to every question or comment that I get. Subscribe to the channel, hit the little notification bell so that you're notified of any future videos that I may release. So you ask, how can I save money on my general liability insurance? The costs to operate my business are going up, my bottom line is shrinking, and I need to find some ways to save money. I tell people all the time, it's not a good idea to cut your insurance. You don't want to lower your limits. You don't want to cut out policies. You don't want to buy a cheap policy that's going to have lots of exclusions. But there are things that you can do to still maintain the same quality of coverage that you have, but to save money. The first one is make sure you have preparation of all the documentations that relate to your company's safety culture, the training that you provide your team, quality assurance. You might wonder why. Well, think about it. A general liability company, an insurance company, is assuming the risk of the liability that your company creates in relation to premise, operations, completed operations, contingent liability, and contractual liability. If you're safer, if you're providing more training to your team to make sure that there's not more risk or liability exposure out there, an insurance company is going to be more willing to insure you at a premium that's less expensive. So they don't need as much premium to assume the risk of your company because your company's safer. Your company has a better safety culture. Your company has more training. Your company limits the exposures, prevents loss before it happens. Insurance companies love that, and that's going to get you a better loss history and a better insurance cost for your general liability policy. Hope that makes sense. Second one, if you have the opportunity to package your general liability with other lines of insurance when available, go ahead and do that. There's monoline general liability policies, so you can buy general liability on its own, but there's also business owner policies, which are very preferred, commercial package policies, which are also better to have if you can. More high hazard industries are not gonna be able to buy those, but if you're in an industry where those are available, where you can package your general liability with, let's say, commercial property, professional or management lines of liability, go ahead and do that because it's going to save you money on all lines of coverage. Not only are you going to save money because, you're not buying policies individually, but you're also going to save money because you could get discounts and there's more preferred. So more preferred policy types, more preferred carriers, better premiums. Package your policies when they're available. Next, and I might be biased, but hire a great independent insurance agency to work on your behalf. Why do I say that? Well, I'm biased. We're an independent agency, of course, right? It's not a plug for us. It's any independent agency, but hire an agency that understands your industry, understands your niche, understands your business, is in your region. Develop that relationship. They'll grow to learn your business and they'll do a really good job for you because now they understand your business, they understand your exposures, your risks, where you've been, what carriers you've had coverage with, how your history is. They can explain things better to underwriters. Agencies have multiple contracts. That's what makes them independent. Independent agency doesn't represent one carrier like a direct writer, like an insurtech, or like a captive insurance company. Any independent agency represents multiple carriers, has contracts, can maneuver more around the system. When rates are going up, a good brokerage will get ahead of it, work on your renewal way ahead of time, and being able to move you around in the marketplace, what's the best fit for you, not necessarily what's the best fit for them. So hire a great independent insurance agency. The next one, don't underestimate your activity going into the policy year. People think, and this is something that we hear all the time, if you underestimate your gross sales, your gross payrolls, if you're a contractor, your sub cost, your number of units sold, if it's product liability, whatever it may be, don't underestimate your business activity to try to get a lower premium because you're going to cost yourself more money in the end. Why? A lot of times when you underestimate your business activity, you're cutting yourself short on the rates that you get on your policy. And those rates stay true throughout the entire policy form. So if you're adding endorsements during the term, or if you have an audit where your carrier found out that you're doing more business than what you said, now you're paying the rate that you were assigned at the beginning of the term, which will be a higher rate than if you estimated higher activity. In most situations, insurance companies extend better net rates when you have more of it. Don't undercut it. Don't underestimate it. Different carriers have different underwriting guidelines and different appetite for business size. And if you underestimate and now you make your business seem smaller than what it really is, that might cut out a large part of the marketplace that's available to you otherwise. Explain it to your agent. Let your agent understand, okay, what size is this company? What are they projecting? How much business are they doing? And what markets are best available for this particular company? The next one is consider your total cost of risk and make changes when necessary. If you're really looking to cut costs and you need to save money on your policy, there's ways that you can can do that by assuming some more of the risk yourself and not pushing as much of it off an insurance policy. And remember, an insurance policy is simply a transfer of risk. So you're transferring your risk and your exposure from yourself and your company onto the insurance company. What can you do? Well, you can raise deductibles. If you've had a policy for a long time and let's say you've been paying premium on a lower deductible, maybe $1,000 or $2,500, some cases even $500. If you want to assume some more of the risk, push that deductible up. Understand the forms, understand where you may be changing policy forms, speak to your insurance agent or your insurance professional about these forms. Is there an opportunity maybe to assume more risk by having additional exclusions on the policy? I hate policy exclusions. Of course, we want the broadest form possible, but how much money do you really need to save? The worst thing is buying one of those inexpensive insurance policies, not knowing what's in the coverage. But if you know it and you assume the risk yourself, that could lead to lower premiums and a cost saving. There's 5 tips that I gave you just today on how to reduce the cost of your general liability insurance policy. Here's a little extra bonus to keep in mind. Deploy great risk management, loss prevention standards outside your insurance policy. A lot of the forms in the policy, if you read your policy, and make sure you do, I tell people all the time, read your general liability policy. Understand the coverage, understand the forms, understand the risk that the policy won't pick up that you're assuming, but also have great risk management practices for your business outside of the insurance coverage, and that's going to help you in the long run. For example, contracts. Contracts are really important when it comes to a strong business, especially if you're in construction, if you're a lessor, if you're leasing out space to tenants, if you're a property owner or developer and you're hiring contractors, whatever it may be. Solid contractual agreements with hold harmless language, indemnification clauses, making sure you understand the warranties in the policy that dictate what language you need to have in place. At the end of the day, those are the types of things that are going to help you not only maintain a sound business and a business that's safe and secure from having liability issues and lawsuits, but also to show insurance companies, especially general liability carriers, that you are safe, that you do have those preventions and those safety protocols in place. So don't forget that either. That's just a little bonus tip. If you have any questions about any of this, you can reach out to our agency directly. Our direct number is 858-384-1506. Email hello@foagency.com. Also, head over to our website. We have some great ways to communicate with us: live chat, text messaging, web forms where you can reach out. We have a great blog, which gives a lot of information about all things insurance and risk management. So don't forget to check it out. We really do appreciate your support. Thank you for watching, and we hope this video helped. Hope to see you on another one soon. Take care. Thanks again.